This morning, our focus is on Kim Lun Corp, which returned to the black in the second quarter from a year ago. RHB Research says it's expecting the company's recovery to pick up the pace and upgraded the stock from neutral to buy, target price 89 cent. Kim Lun last closed at 78.5 cent. In a note, RHB Research pointed out that despite returning to profit year-on-year, Kim Lun's second quarter core earnings of 1.6 million ringgit was down by 79% quarter-on-quarter due to the FMCO. This brought its first half core net profit to 9.3 million ringgit, which is at just 34% of its estimates and 29% of the streets. However, now that SOPs have been relaxed, allowing construction companies to increase operational capacity upon meeting certain requirements, RHB says Kim Lun's earnings recovery should gain pace in the second half of the year. The company has an outstanding order book of 1.1 billion ringgit, which provides less than 2 years of earnings visibility. It continues to eye construction tender opportunities from projects including the Pan-Borneo Highway, Sarawak's ART, and the Johor-Singapore RTS. For its property segment, Kim Lun plans to launch Phase 2 of Bukit Bayu project and semi-D houses in Bandar Sri Alam, Johor. RHB said it's upgrading Kim Lun to buy on its recent share price weakness and remains cautiously optimistic on contract replenishment opportunities ahead. However, it cut its FY21 earnings forecast by 11% to factor in the lower project margin assumption due to idle costs during the lockdown period. It kept its replenishment assumption of 500 million ringgit per annum and 8 times target FY22 forecast PE. So what's the consensus? According to Bursa Marketplace, there are 2 buys and 3 holds on the stock, with a target price averaging out to 1 ringgit and 1 cent. Kim Lun last closed at 78.5 cent, so that implies a potential gain of about 29%.